Thank you very much, Mr. Chair, and thank you to the entire committee for the invitation to come here today. Now, first of all, about the European Network on Debt and Development. We are part of a broader Tax Justice Europe network, and what we are is a network of civil society organizations across Europe. We have more than 50 organizations on board, and we follow these issues very closely. We monitor the situation at the national level, the EU level, as well as the global level, because we now have a global alliance for tax justice working together with our partners in the South. So thank you very much for the invitation. I'm going to speak on the issue that we're discussing here today, which is the international dimension. I'm also going to touch on some solutions that I would suggest. But first of all, I want to say something about the importance of having a thorough investigation and follow-up to LuxLeaks. We mustn't forget that this was a shocking and eye-opening scandal for many. We've been through a financial and economic crisis. We've been through austerity and job losses, reduction in public services and financial uncertainty. And after this, it is suddenly revealed that to the public that hundreds of multinational enterprises have had secret so-called sweetheart deals with Luxembourg, allowing them to lower their tax levels to absurdly low levels, including in some cases below 1%. Now, in the eyes of the public, it must seem very, very strange that there was no official investigation, there was no follow-up, there was no real explanation from those who seemed to have been involved. There was no accountability, and there was no credible promise for true change. The companies involved seem to be continuing their business as usual, and we are still not allowed to know what they pay in taxes. And we have a constant flow of scandals that keep hitting the news, involving more companies, more governments, and clearly indicating that something is still very, very wrong. Jean-Claude Juncker, the man who was leading Luxembourg during the years when these sweetheart deals were signed, was elected to one of the most powerful positions in the European Union, namely as head of the European Commission. This is the same Commission that is supposed to propose the legislative changes to fix the system. He might have good intentions, but we haven't seen this yet. In the eyes of the public, the situation will likely not become easier to comprehend when Luxembourg, exactly 1 month from now, takes over the presidency of the European Union. Now, we know that the presidency changes every 6 months, but nonetheless, it will look as if the fox is guarding the chickens. And even worse, at the end of this year, court cases will begin in Luxembourg, targeting 2 of the whistleblowers and 1 of the journalists who exposed this scandal. These people, whose only crime was to tell us the truth, now risk several years in prison. This is the point where we start asking ourselves, what kind of society are we living in? These people revealed that our societies are losing billions of euros, yet all that happened was that they got sued. Meanwhile, multinational companies, politicians and governments who were responsible seem to walk away without any consequences. In fact, they seem to be expanding their power, and some of them seem to get elected to leadership roles in the European Union. Let's not be blind to the fact that this is a ticking time bomb under the credibility of the European Union as a whole, and ignoring LuxLeaks will not make it go away. Currently, the European Parliament seems to be the citizens' best hope that at least one of the EU institutions will not let this situation continue. And we're sorry to hear that the work of this committee is hampered by multinational corporations who refuse to come here and even talk to you, and by European governments who also don't want to come and discuss this. We hope that this will only make the European Parliament even more determined to continue the fight to expose the truth to reform the system, to introduce transparency, accountability and tax justice, and a proper protection of whistleblowers. And we hope that you will soon manage to wake up the European Commission and the Council and get them to realize that business as usual is not an option. Now, as to the international dimension, unfortunately, it's not only in Europe that tax evasion and avoidance is causing outcries. There is a growing amount of evidence that these problems impact developing countries even harder than they impact us. And in the developing countries, the debate about this issue and about illicit financial flows is escalating. There was recently a report from a high-level panel which was chaired by Thabo Mbeki, the former president of South Africa. And it pointed out that Africa is currently losing more money due to illicit financial flows than what they receive as aid. From that perspective, it's no wonder that the fight to eradicate poverty has been an uphill battle. The Mbeki report also pointed out that it is somewhat contradictory for developed countries to continue to provide technical assistance and development aid to Africa, while at the same time maintaining tax rules that enable the bleeding of the continent's resources. The developing countries are starting to notice that the global taxing standards are not working and that this is costing them high amount of resources. And they're starting to question the way that these global taxing standards are developed. In particular, they're asking why these standards are decided behind closed doors at the OECD in Paris in a process where more than 100 developing countries are excluded from participating. Now the developing countries have put forward a proposal in the United Nations to establish a tax committee where all countries have a seat at the table and where truly global solutions can be found. This proposal has been supported by the European Parliament, and we are thankful for that. But we don't welcome the fact that the European member states are rejecting the proposal. It is very surprising to see European governments that pride themselves of being democratic defend the right of an exclusive club of countries to decide the taxing policies for everyone else. The EU governments are currently arguing that developing countries are participating in the OECD process and that the concerns that they have are taken into account. However, the truth is that while a few developing countries have been invited to some meetings, more than 100 countries remain excluded. And last year there were several proposals as to how the interests of the poorest countries could be integrated into the work of the OECD BEPS process, and these were all rejected. Yes, I'm aware of time. I will wrap up. Lastly, the EU is also arguing that it is more efficient to exclude half the world's countries from the process. However, we must remember that the core of the problem we have is that governments are not able to cooperate, and that's why we have a crisis in the global tax system. Good. In terms of the solutions, well, first of all, we cannot have a society where people go to jail for telling the truth about how much multinational enterprises are paying in taxes. That's why we need public country-by-country reporting. We need to see what the companies are actually paying, and we urge all members of the European Parliament to vote yes to the proposal for public country-by-country reporting on June 10 when it comes to a vote as part of the Shareholders' Rights Directive. We obviously need an EU directive to ensure proper protection of whistleblowers. And we need a fair tax system. We cannot have our small and medium enterprises trying to compete with multinational enterprises that are not paying their taxes. We cannot have companies that are using the public services, such as education, the rule of law and infrastructure, and yet they pull their profits into tax havens to avoid to contribute to these public services. Last point is that if we are to have a fair tax system, we need to have a principle that prevents individual nation states from destroying the tax base of other states. We have this when it comes to environmental pollution. For example, chemicals. It is generally understood that a country cannot pour chemicals into another country's backyard. And it is the same problem that we have for taxation. On genetic resources, we have a convention that ensures that unless the home country of a multinational commits to ensuring transparency and compliance with international standards, that company will not be allowed to operate in other jurisdictions. We need similar solutions for tax. Thank you very much.
Merci, Madame.
Thank you very much. And I'd now like to give the floor to our two rapporteurs. Mrs. Ferreira.
Well, thank you very much for your presence here, for your opinions, your suggestions, and also for your work, because you did a lot of work as an organisation, which is absolutely paramount for us, and we are very glad to be able to benefit from your serious contribution. On details, you mentioned now the Parliament is trying to get the best of this opportunity and to fill the existing gaps. You already mentioned some of them. You mentioned country-by-country reporting. You mentioned the need to protect whistleblowers. But what else do you have in your agenda that you can suggest to us? We are working on CCCTB. We are working on the possibility to have a blacklist from European origin of non-cooperative jurisdictions. How do you think this could be done? What is the importance you attribute to exchange of rulings and transparency practices? So if you have other elements that you want to expand about, that is absolutely essential. Then could you please sum up the kind of figures that you managed to collect on spillover effects, both on less developed countries and, if available, also inside the European Union, because there is also spillover effects and serious ones inside Europe. Lastly, I would ask you to explain in more detail what kind of elements you find in the work with tax havens. So what is exactly the role of tax havens, as far as you can explain, in the whole process, and what is the role that European Union can do, and what is the role that we can only do through international negotiations? Thank you.
Merci, Elisa.
Thank you, Elisa. McIntyre.
Yeah, thank you very much, Chair. Thank you very much, Mrs. Ryding, for the presentation. I would like to focus on the data you are collecting and publishing. That is a very important work, that non-governmental organizations collect data and are in favor of transparency. Now, please, could you tell us what obstacles are there to collect the data? With what problems are you confronted? And perhaps you have some examples where we can see why you are lobbying for another data basis. That's a major question which I would like to put to you. Thank you very much.
Je vous remercie. Alors,
Thank you very much. So I would suggest that we do what we did before, give the floor to a spokesman from each one of the groups, and then, Mrs. Ryding, you'll be able to answer all the questions. So first of all, for the EPP, Mr. Thomas Mann.
Thank
you very much, Chairman. Mrs. Ryding, you mentioned the question of debt in developing countries and talked about tax justice. Of course, all of us would hope that in the EU and beyond there would be a global dimension. In the European area and in Parliament, a great deal has been done. We had the Monti report, which has been mentioned in our debate. And I would point out that in the Econ committee, we had the question of drying out the tax havens, and the response was very half-hearted because of the member states. And these were basically attempts at getting things to change, and no doubt things are changing. And now we're able to at least put these things on the table. Information exchange between tax authorities should be mandatory and should be automatic. And can this also apply to emerging countries? Because there again, there are financial transactions. And that's my first question. Secondly, OECD, you hinted at this on the question of tax inspectors without borders. Now, if we become involved in that, or ask the member states to take an interest there, is it possible that emerging countries would also be involved? Now, thirdly, there is a demand coming from the Econ report from Econ for Development, the Development Committee, where we say EU institutions would not work with countries which are not prepared to cooperate with us in tax matters. Is that something which is just a pipe dream? We want to end tax evasion and tax avoidance and tax dodging, and indeed base erosion and profit shifting. Do you think that we've got a handle on this problem, or are we doing far too little still?
Thank you. Now for the Social Democrats, Mr. Kofod.
Thank you so much, Chair, and thank you so much for an excellent presentation. And thank you so much also for the work that you're doing, focusing on identifying loopholes and both in international and national tax law, and also the behavior of governments and companies. I think it's very important, the work you're doing, and it's something we really need. And there's no doubt that also this committee, the way we work, we also want to carry forward and bring an end to the destructive tax competition that de facto is leaving us to a race to the bottom on tax and also on aggressive tax planning. I have a few questions. First of all, most of your recommendations are in line with what we are discussing here. For example, mandatory exchange of information and country-by-country reporting. But we have seen, as you also pointed to, some member states, they are unwilling or untrusting to shift their practices. And the argument they're using often is that it's disadvantageous to them in a world with a highly competitive environment. So I would like to see, what is your suggestions besides being cohesive on measures? What kind of incentive do you think there should be that will have the strongest impact also on governments on this issue, to change this issue? Then also on country-by-country reporting, even if we get this true, I would like to, and we get the relevant information from companies. From your perspective, what kind of framework could also help us to unlock this information? Because there will be a lot of information if we have country-by-country reporting, but how can we ensure that it can be useful to end this harmful tax practice? And finally, I just want to hear also your view on the OECD base erosion and profit shifting initiatives that are making some progress, but seen from your point of view, what kind of things should be done there as well? Thank you so much.
Merci, Jeppe.
Thank you, Jeppe.
Bernd Lucke, Vice Chair of this committee.
Vielen Dank. Ich spreche Deutsch.
Thank you very much. I'll be speaking in German. I'd like to come back to the question of country-by-country reporting. The first point to make is that the objection that you'll often hear is about in country-by-country reporting, very often sensitive information needs to be divulged, and that you cannot expect that you can ask that of companies. Would you agree with that? Or at least what do you think is the minimum of information which should be disclosed on the part of companies in order to have meaningful data about the scale of taxation of companies, and in order to be able to identify tax havens, particularly when this is sensitive information? Is it possible to avoid that? And then secondly, would you take the view that where information is not sensitive, of course, there may be differences of evaluation. The company may not agree with that. Is it possible to achieve the purpose of country-by-country reporting by anonymizing the information so that it was not a direct disclosure by companies about the amount taxed in individual countries, but the tax authorities are under an obligation to make available the relevant information under country by country reporting, but in a way which was anonymised. And this is my question. It would then not be possible to identify the companies, and then this would, I think, avoid the charge that it shouldn't be made available because it was sensitive. Thank you.
Thank you. Now for the Elder Group. Sylvie Goudard's not there. So for Fabio De Massi.
Thank you, Chair. Ms. Ryding, thank you for being here with us. My first question, since Eurodad is also concerned with the issue of developing countries, would you judge there's enough progress in the framework of the BEPS initiative, in the framework of the OECD? Would you see other multilateral fora suitable to tackle the issue of tax evasion, tax avoidance also in developing countries, since we know that a lot of dodgy people whitewash their money in places like Luxembourg and deprive their own people in developing countries from tax income? Secondly, what is your perspective on the recent Commission package, so with automatic exchange of information and so on? Thirdly, as we were in Luxembourg and we talked to the Minister of Finance of Luxembourg, he told us, you know, our tax authorities alerted sometimes Germany, even France, about abnormally high profits claimed in Luxembourg, and they didn't react. So apparently some ministers of finance had a nice sleep during that time, or tax authorities, whoever. So against this background, would you see it necessary that exchange of information has public access, maybe with non-disclosure of very sensitive business information, which has nothing to do with taxation? As Mr. Moscovici also indicated, he's in favor. And what would be the value of exchange of information without such public access? Secondly, the same on country-by-country reporting, where the Dutch Parliament took a resolution in favor of public access. Would you also see the necessity there to have public access in order to wake up ministers of finance across Europe? Thank you.
Merci Fabio.
Thank you, Fabio. And for the Greens, the Vice President, Eva Joly. Thank you, Chair. Well, thank you very much for coming here today to be able to share with us your great experience and your assessment of what developing countries are losing because of this loss of taxation. And of course, what we heard about 2009 was very interesting, because they lost much more in these illicit financial flows than what they got in development aid. So it's very important to assess what the developing countries have lost. Can you tell us more about that? And do you think that the European Commission ought to ask the Member States to produce an assessment of what the different tax regimes?
Okay. What? Well, okay. What I asked her is...
Nous avons tradition dans certaines traductions.
We have interpretation in many languages, but not of Norwegian. I think the interpreters understand Norwegian really well, but in any case, I think Mrs. Ryding has understood the question, which was that, according to a Norwegian report, developing countries lose 10 times more through these illicit financial flows than what they receive in development aid. And I know that Eurodad has carried out an assessment, and I'd like you to tell us exactly what amount they worked out. And then my specific question is, do you think that the European Commission ought to ask the Member States to assess the impact of their tax systems on the developing countries. That is to say, tell us really clearly that for these few billions that the Netherlands get from their tax regime, what is the corresponding loss then for the developing countries? Because I think that could help us. And then tell us too what things would be important to your mind to help the developing countries to maintain their rights, their fair share, and their own resources. Thank you.
Merci, Eva, pour cette...
Thank you, Eva, for your multilingual contribution. Mrs. Ryding certainly understood your questions. Now for the EFTD group, Marco Zanni.
Grazie Presidente e grazie.
Thank you very much, Chairman. And thank you very much to Mrs. Ryding. Thanks to her for all the work that she's done with her association. We need to keep up the pressure, to keep up the head of steam, so that politicians understand that there are problems even within the European Union. Now, on today's questions, was the case with Fabio De Masi, I'm interested in the transparency package, which has been flagged up, announced by the Commission. Particularly, this transparency, the exchange of information, is this going to be the magic, the panacea, a deus ex machina, which will solve the problems of tax dodging? Or is this only a very small part of the overall picture? I'd like to just repeat the question I put to Senator Monti earlier on the question of the banking system. Let me repeat, all of the lawful and unlawful tax financial transactions do go through the tax administrations, and it's a question of access to information for them. And we need the information about the transactions taking place in the banking system, the banking system. And the important thing is that the European Union should have the powers and the political will to make sure that that information is available, because it's possible to withdraw a banking license should the banks fail to deliver the goods. That might be an effective sanction. Now, when it comes to investment, at a time of austerity, within the tax administrations, they are not investing in IT and in computers. In other words, with VAT. And it's important there should be, for example, a real European register with uniform information at EU level. And that might help to tackle VAT avoidance. Now, on the question of third countries, do you really believe that it will be possible to address problems of third countries and developing countries if we are unable to solve those problems within the European Union by means of stronger political coordination than what we have? Will we be able to deliver the results at a bigger level with the OECD?
Mrs. Ryding, now you have the floor. If you could answer very specifically and briefly.
Yes, I'll try to answer briefly to what was a very high number of questions. Let me start with has enough been done? We've had a number of issues mentioned here today. For example, the Code of Conduct Group. Of course, we've tried as organizations to approach the existing institutions and arrangements. The Code of Conduct Group, or as they like to call themselves, the Code, their meetings are secret. We're not allowed to know what they talk about. We noticed that they gave a PowerPoint presentation some years ago saying that they had removed all harmful tax practices in Europe. Meanwhile, when you open the paper, you get the feeling that this code is a bit disconnected from reality. So we are concerned about the Code of Conduct Group. I cannot comment on what they're doing because I'm not allowed to know. The transparency package from the European Commission, there was one first transparency package sent out this spring. We're waiting now for another package. I don't think the spring package was helpful to anyone because the Commission went out and said, we are responding with a transparency package. The obvious question was, transparency, what's the new information that the public will be allowed to see? And the answer was there's nothing more the public is allowed to see, because we're apparently redefining transparency now. Transparency doesn't mean things that people can see. It means that things that some tax administrations, not all tax administrations, but some tax administrations will be allowed to see. This game is unhelpful. It increases the lack of trust. So I think it's very important that the communication around these packages be exact. To exchange the rulings between tax administrations, I think, is a very, very minimum step, and it does in no way solve the problem that we're facing. Also on the OECD, well, the OECD also sent out a press release last year saying a major step forward for transparency. It was shocking to read because what they were saying was that all country-by-country reporting should be confidential. Now, one of the very big and important steps forwards we've had is thanks to the European Parliament. We have the Capital Requirements Directive, which means we have public country-by-country reporting for banks. We will get the information for banks, and it's being implemented now. I think it's rude for the member states to go to the OECD and adopt a recommendation saying that this information should now be made confidential again. It's even more rude to send out a press release saying that that would be a step forward with transparency. So I think we should start being honest and not use transparency for things that are actually meant to be confidential. On the issue of the developing countries, of course, yes, we've been trying to estimate the losses. And there are a number of different numbers out there. One thing that challenges the situation a lot is the complete lack of data. And that brings me to what is country-by-country reporting. Sometimes people think that this is an extremely sensitive thing. We're asking very basic questions. How much does Coca-Cola pay in tax in Denmark? That's one question. How many employees do they have? What is their turnover? What we want to see is we want to see what's their economic activity, and we want to compare that to their tax payments. And then we want to look at the tax haven countries and see what is Coca-Cola or McDonald's, what are they doing in the tax havens? How many employees do they have there? And how much taxes do they pay? This is not confidential information. In fact, for all national companies, this is public, because they cannot hide behind transboundary arrangements to hide these numbers. These numbers are available. I do agree that not all tax information should be public. For individuals, we're not talking about putting information out in the public, not at all. But when it comes to basic numbers about what multinationals are actually doing, I have not heard one single rational argument for why this should be secret. But that brings me to the exercise of estimating how much is lost in developing countries. We actually have very little idea about what the multinationals are doing in developing countries, what kind of money they're making, and that goes for this whole exercise, is we cannot estimate what's going on. What you're seeing is our very best efforts, and we keep arriving at numbers that are at a minimum as high as the development aid they receive, but it is true, as Mrs. Joly also pointed out, that some of the numbers are substantially higher. Can we solve this issue in the United Nations or at the global level if we can't even solve it in the European Union? Well, maybe it would be a gift to this debate if we weren't locked in the European Union, because we cannot blacklist Luxembourg. We cannot blacklist Netherlands, because those are member states. So the exercise in the European Union blacklisting processes has often been that some smaller developing countries have ended up on random blacklists, while the very obvious problems we have in the European Union have gone unnoticed. So having an international negotiation that ensures that we can actually also talk about the internal family problems that we have in the EU in a new setting where Luxembourg is not some sort of special country that you're not allowed to discuss would actually be refreshing. It is extremely difficult to have this type of international negotiation, but we have seen before that when countries start losing billions of euros, which is actually the situation, they are starting to be willing to eject multinational enterprises from their countries. They are willing to say, you are not allowed to do business in my country. We saw this for genetic resources. A country like Brazil was actually saying that multinational enterprises were not welcome unless they abided by the rules. So we are getting to the stage where this is a realistic possibility. We're already seeing China and Brazil implement tax systems that are extremely hard on multinational enterprises. It will lead to double taxation. I'm not sure it's going to solve the problem because they can't ensure proper transparency, but they are doing everything they can to defend their economies. We will see more and more unilateral action. It's not going to be the tax system that anyone wants, but it's going to make it clear to everyone, including the multinational enterprises, that we can't just keep going like this and pretend that all those scandals didn't happen. So I think that is a very, the best attempt I can do to answer all these questions. But I can tell you that the estimated losses from developing countries there are many different ways of measuring it. We always end at very, very high numbers.
Très bien, merci beaucoup, Madame.
Thank you very much, Madam. I think that your testimony will have been of great interest to our members. We want to arrive at a positive result, but we will depend on getting cooperation from all of the stakeholders and everyone who has contributed to getting the information out and keeping up pressure in public opinion. It does take time. It takes time. But there is progress. We needed the financial crisis before the G20 at global level decided on certain things, and implementing the Dodd-Frank Act, for example, in the US, the regulations which we've adopted in the European Union. It may not be, is it ideal? No, but it's progress. Banking secrecy, there we were successful after years of effort to get the lifting of the basics of banking secrecy. And FATCA as well was a major contribution. Now, looking at the various instruments we have, and this is something which has emerged in the course of our missions to certain member states. Something which has emerged is that none of them can run the risk of losing their good name, their reputation. If public opinion is informed, if this is out in the open worldwide, in the entire financial community, then irrespective of the country size, no one can afford to be the black sheep. Of course, it could well be that all the sheep are black, and in a system where it's not possible, to distinguish between different shades of colour, that may be the case. But the minute you can see the actual colour of the sheep, then things will evolve, even if it's too slow for us. So thank you very much, Madam, for your contribution. And can I, on behalf of the committee, thank you for your intervention. And now, without further ado,